How do you set price ranges for crypto grid trading? Imagine you're about to set up a trading system that automatically buys and sells a cryptocurrency based on its price movements. The key is choosing the right price range to work within. First, you need to analyze the market to find a realistic range where the price tends to stay during your trading period. Look at recent price charts, support and resistance levels, and how volatile the coin has been lately. The lower limit is where you want the bot to start buying, so pick a price that's below the current market but not too far down. The upper limit is where you want it to sell, so choose a price above the current market that the price is likely to reach. Setting these limits too wide means the price might never hit the top or bottom, and your bot won't trade much. Too narrow, and it might trigger too many trades with small profits. Next, divide this range into smaller sections called grid levels. You can do this in two ways. The first is an arithmetic grid, where each level is a fixed dollar amount apart. For example, if your range is $50,000 to $60,000 and you want 10 grids, each one is $1,000 apart. This works well if the market is moving sideways or within a stable range. The second method is a geometric grid, where each level is a fixed percentage higher than the previous one. For instance, each grid could be a 2% increase from the last. This method suits trending or volatile markets where price changes are proportional rather than fixed. The number of grids you choose impacts how often your bot trades. More grids mean more frequent trades but smaller profits per trade. Fewer grids lead to less trading but larger gains each time. You also need to decide on the grid step, which is the percentage or dollar difference between each level. A smaller step, like 0.5%, results in more trades with smaller profits. A larger step, like 2%, reduces trades but can bring in bigger gains. Your investment size matters too. A smaller budget might mean narrowing your range or reducing the number of grids to keep trade sizes manageable. Use recent price data and volatility measures to help set realistic upper and lower limits. Always backtest your settings on historical data to see how they would have performed. Adjust your range and grid spacing based on how volatile the coin is and your risk comfort. Remember, the goal is to find a balance where the price stays within your range often enough for your bot to make consistent trades without risking too much. Setting the right price range is about understanding market behavior, choosing appropriate grid levels, and managing your budget wisely. This way, your short-term trading strategy can work smoothly and help you make the most of market fluctuations.